Good morning, everyone, and welcome to this new edition of the Daily Analysis. Let's get started right away with what happened and the news that came in over the weekend. So there's this announcement from Tencent, later confirmed also on the Chinese side, about agreements for a mutual reduction of tariffs. Just a few minutes ago, there was also news that a substantial agreement has been reached to move towards, mutual cuts. So this not only triggered a gap up opening on all the indices, obviously both European and American, but just now at the opening of the European markets, there was a further surge upwards in all the indices. We'll see then what the developments will be. And above all, we'll need to understand what the details of these agreements are, because, when they arrive, a press conference by Tencent is scheduled, but the exact time is still uncertain. So we'll need to stay tuned to these reports and to this press conference, which should clarify the terms of these agreements. From a macroeconomic point of view, there are no important data releases today. Tomorrow, however, we start with the CPI, which could give us an initial reading in terms of inflation, because even though there is now a move toward de-escalation on the tariff front, these new base tariffs of 10% still remain in place, and this will certainly create inflationary pressure. In my opinion, this is what is worrying the Fed the most, especially considering that the effect of all these increases on the stock indices is, of course, also an increase in government bond yields. And above all, they are starting to enter concerning territory, given the large amount of interest and new issuances that the U.S. debt needs in order to cover current expenses. So in short, we are approaching rather worrying levels. We'll see then how the Fed will react to try to contain this ongoing growth. Okay, with that brief aside out of the way, let's obviously take a look from a technical perspective. In short, as I mentioned earlier, the situation seems pretty clear to me. So what you're looking at here is a 5-minute chart of the NASDAQ. Besides the daily gap up, it even made a weekly gap up. The NASDAQ did, not the ES. So in short, an absolutely sparkling situation. Right now we're already operating at the daily range highs, and in fact we're at weekly highs as well, so caution is warranted, because this is definitely a positive and vibrant scenario. But then, as I've said several times in recent days, we need to look at the details of these agreements, and because, as the saying goes, the devil is in the details. So let's wait and not get carried away. There's definitely a positive outlook, and the long side is absolutely to be preferred. We'll probably go on to make new highs. We're also close to the 200-day moving averages. I don't actually use them myself, but they're definitely a point of reference, and they're watched by many traders after all. So maximum attention, because there's positivity. So we'll probably see another day of gains. Unless, of course, we take a closer look at these agreements, which might, not be as positive as traders might be expecting. But as I said, for now, we still don't know what these details are, so we just have to wait. At the moment, the market is moving upward, so we have to adapt to this interpretation that most traders are giving. So for ES, right now it seems appropriate to say let's monitor the 21,000 area, because a break above 21,000 would definitely open up room for a further rise, even towards 21.3 or 21.5. On the downside, obviously, if news comes in, that calls into question all these nice words. We heard over the weekend, let's first monitor this VX area in the morning, because this has probably been a lively start to the European session, and but it might retrace a bit and wait a little for the opening of the American markets to see what the reaction will be at the open. but maybe we'll also find out the time. So there could also be some anticipation for Benson's press conference. So we have to play it by ear and be ready for a change in scenario if these rumors change, or if these agreements in the end don't go through. Another positive development is also, let's say, this meeting for a truce in Ukraine. So a meeting set in Turkey, between now Putin and Zelensky. So this too is another piece we need to keep in mind. So maximum attention. Okay, I looked at the NASDAQ, but let's also take a look at the ES. Anyway, these are the weekly levels. As you can see how we are already trading above 22, even right up against the weekly up on VIX level. So this is absolutely a Goldilocks scenario. At this moment, we are roughly in that. We have reached the target of that fourth wave we pointed out about 7-10 days ago, roughly, which was more or less 5-8-30. I think I still have those areas marked on SC and on SPX. Here they are. We realize that they were more or less equivalent. Yes, here it is. 5-8-30. So this was the area 5-8-30, 5-8-50 for ES, which basically just hit those levels this morning. So be careful. Also for this other reason, as it could easily be buy the rumor, sell the news situation. So we need to be cautious and ready for any scenario. So pay close attention to ES as well. On the upside, of course, we're monitoring the 5-9 area, which will definitely act as resistance on the way down. A move back below 5-8 could trigger a breakout, but also a retracement down to the 5-760, 5-770 area, perhaps looking for a break of the re-entry to close the gap. This could also be a possible scenario, so pay maximum attention. Let's move on to the other American future, which obviously I think goes without saying. They are more or less in the same condition. This is the Dow Jones, which is working. It's trading above 42,000, so let's keep an eye on the 42,000 area. A breakout could lead to, there you go, a recovery, and probably a test of the entire opening area from last night's regular trading hours, and maybe even a gap closure. I repeat, the market is quite volatile at the moment. This could be, well, it could be taken for granted and lead to a sell the news event. I repeat, we need to stay flexible in all of this. This is the Russell. In the meantime, there was quite a strong upward move at the open, very precise on the tracked down, in short. Let's pay attention, guys, because the scenario could change. There's volatility has returned, and there's already volume early in the morning, so maximum attention is needed. I repeat, I'll keep stressing this until the end of this daily analysis. The DAX continues to hit new all-time highs. At the moment, it too is working well above the weekly VR1. So here too the scenario is quite lively, even though right now with strong volume the entire opening candle is being retraced. So let's keep an eye on it, guys. We need to stay alert. This could easily be a good spot to go long because, well, this high here. But there is volatility, and I repeat, we're still missing the details of all these agreement announcements. Let's wait. So having looked at the DAX, let's take a look at oil. It too, in short, is benefiting a bit from the momentum of a return to production, so to a consumption of oil. This has triggered a nice upward push that has brought prices back for now to the 63.30, 63.50 area. We'll see if it manages to break through. Yuzengi, this was exactly one of the levels we had pointed out. Here it is. That area to break through is right here, basically. We're getting there. This is the final area to break through, which is 64.70, 64.90. So we're going to keep an eye on this area because a possible breakout could push the price well beyond, maybe even towards a recovery of the 70 area. We'll see. Let's monitor this level closely on the upside. On the downside, in my opinion, we should watch the weekly HV level, which is around 6110. Let's take a look at gold, of course, which is obviously going against the trend and has pulled back, moving downward on this. It too is taking quite a hit, usually finding support around 2020. It's trading below the expected weekly low, so we need to be very careful here as well, because we're really, as you can see, right here brushing up against these lows that were recorded at the beginning of May. So breaking through these could definitely bring the price first down to the 3,180 area, and then even a bit lower to 3,150. Why not? If, of course, the momentum in equities were to continue, well, the flip side of the coin would be a bit of a downside for gold. We looked at the SPX earlier, so let's keep monitoring it. Obviously, they closed on Friday with the gap up, so we'll probably open around this area here. Let's see if we can also on SPX, but with a good chance. Yes, we'll reach the target we had indicated for this fourth wave, exactly the same size. Maybe you can go back and watch the morning briefing where I talked about it and presented this analysis. Lastly, let's take a quick look at the cryptos, which were pretty calm this morning. But of course, with the opening of the European markets and the push they had, they also saw quite a bit of movement. I insist, except, well, here you see this is Bitcoin. It had broken this previous high here at 105, basically touching the VIX area, but then immediately fell back into the range. It's possible that we could see a downward break of the previous range with a test from the opposite side of the VIX levels, or it could just stay in this range, waiting for what will come out of Benson's press conference, because even if only marginally, cryptos are definitely influenced by the overall state of the economy. Perfect. We've reached the end of this daily analysis. As always, I invite you to leave a like on the video, follow me on social media. We'll catch up later in the chat, and thank you all for your attention.